What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It is the weekend, and it is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all of the major FAANG stocks. And this week, we had Meta, we had NVIDIA, we had Google, we had Microsoft, we had Tesla. Shoot, pretty much every single one of these stocks went up double digits this week. So we better get to the news and kick things off like we always do with Meta Platforms. Looks like Seeking Alpha changed their charts a little bit. Meta started the week at 175.55. The shares were down 4.5% today, and still Meta finished the week up 11.5% to finish the week over $195 per share. It was an epic move for Meta this week. And a lot of that had to do with the fact that there's a lot of news surrounding TikTok this week. Now, there's been an outright ban floated around, but the more recent reporting is they're going to force a sale of TikTok, and we'll certainly see how this goes. This goes back to former President Trump. He was right before he actually left office, he was trying to force a sale, and it definitely appeared that there was a deal on the table. There was a deal with potentially Oracle and Walmart, I believe, and then I think Microsoft and maybe another suitor were going to team up and buy this. Now, obviously, a couple of years has passed since then, and TikTok has gotten way more valuable. I mean, we're probably talking about an asset worth twice as much as what it was a couple of years ago. So that means if they're going to force an outright sale, and maybe it goes through the IPO process, it could be that TikTok just goes through IPO or something like that, and that is how they force a sale. But if they're going to force a sale of this company to another company, we cover the only companies on the face of the earth that can actually afford TikTok. So Apple, Microsoft, Google, and probably Meta as well. Those are the only companies that can afford to buy TikTok outright. Maybe Elon Musk personally, if he sold most of his Tesla stake. Those are the only people on earth that could afford this outright 100%. And so obviously we understand with Washington, are they really going to allow even maybe not an outright purchase, like if Google or Apple wants to buy TikTok 100%, well, is the Washington going to allow them to buy 10% of it, 20% of it, similar to Microsoft a couple of years ago? We'll see what ends up happening here, but obviously this is going to be a major story for the coming weeks ahead. I tell you what, I don't think we're going to see an outright ban of TikTok. Lawmakers are probably smart enough, in air quotes, to understand the political ramifications by like straight up banning a platform this popular. But if that materializes, I tell you what, Meta stock will probably soar 10% alone on that news. But an outright sale to someone else would be very interesting from an investment perspective, and we'll have to monitor it, obviously, here on the channel. Now, the other thing, and probably more importantly to Meta stock in the short run, is they slashed another 10,000 jobs over at the company. And now this goes along with the layoffs that we've seen over the past couple of months for Meta. I think they've eliminated 10 to 20% of their workforce. So Elon Musk gave a lot of air cover and a lot of airspace to a lot of these companies to start firing people and to introduce other product announcements that we'll talk about here in a second. But this will not immediately, we won't see this on the upcoming earnings with Meta, which should report, I think, next month or early the following month. We won't necessarily see it then, but by Q3 and Q4, this is going to show up in the bottom line of Meta, and that is why the stock rallied hard this week. Now, Elon Musk gave Mark Zuckerberg the idea that you can actually pay for those little blue check marks, and Mark Zuckerberg is going to roll out Meta Verified here to the US. And I'm going to be a customer of this because people tell me all the time there's some fake accounts of mine on Instagram. So I'm going to probably have to pay for this. Looks like the service is going to start at $11.99 if you sign up directly on the web. If you go through your phone, considering iOS and Android, Apple and Google take a tax of that, they're actually going to charge you $14.99. Another idea that Elon Musk has given Meta. So they are just taking all the cues from Elon Musk. He's gotten criticized to the 10th degree about his purchase of Twitter, but every tech CEO and tech investor is copying his every move by laying off a large amount of their staff. And now they're going to start charging users for little check marks next to their name. and I think it's brilliant. Moving on to Apple, started the week at 148. This one was up 4.5%, and it's kind of a disappointment. It finished the week at 155, considering most of these other stocks up even more than that. Apple slipped earlier in the week, though, after Foxconn expects smart electronics demand to decline slightly. This is a mature product over at Apple, and so that'll be interesting. I haven't really seen any firm rumors or any specific rumors that Apple would be interested in buying TikTok, but this is the one company on earth that doesn't have quite that conflict of interest. Like, I don't really see the United States government allowing Google or Meta buying TikTok, but if Apple wanted to step up the plate and unload its hundreds of billions of dollars that it has in cash onto an asset like that, well, that is something that could certainly happen. And maybe if you have smart electronics devices that are very mature at this point, I believe the iPhone was released sometime in 2007, it doesn't mean that the revenue is going to go away or even necessarily decline over at Apple, but it's certainly a mature product, and a reacceleration of revenue somehow is going to have to materialize for Apple in the future. Apple said to delay bonuses for some staff and freeze hiring over cost scrutiny. So this company also, the CFO, has gotten their hands on kind of a mid-quarter report, because most of these companies are probably 30 to 40 days away from reporting their earnings. They've seen the numbers. And so when they start doing things like this, it makes you believe that, the costs are going to be shed out of the company. And so obviously Apple more or less kind of being last in line here to do some hiring freezes and some layoffs. Moving on to Amazon. Talk about moving. This stock started the week at $88, up over $10 to finish the week close to $98. In fact, it touched $100 per share intraday today. That is a 12% move on a $1 trillion company. You had a 12% move in a week on Amazon. That's after the company discontinued newspapers and magazine subscriptions from the company's Kindle's magazines, Kindle newsstand, and it will shut down completely in September. So if you have a magazine subscription, you'll be directed to go to the magazine publisher's own website. Rivian is looking to sell electric vans to more customers other than Amazon. Now, Amazon has an important an exclusive deal to actually buy up to 10,000 vans this year from the company, but that is at the low end of the range that it previously provided for the company. So it looks like maybe they're going to be reworking this contract. Obviously, Amazon has a large equity stake in Rivian, so it's probably more or less willing to work with the company, considering if Rivian shares go up, then Amazon tends to do well, at least in its reporting of that stake's value. Moving on to Netflix, start of the week at $286. This one also up 5.8%, finished the week over $303 per share. Now, Netflix recent price cuts could actually raise revenues and be a test for its future. Now, the company cut prices, not here in the United States, not in Canada, not in its major kind of European markets, but in 100 of its smaller market where Netflix likely has a smaller library of content, but also where there was likely more password sharing in some of these other smaller countries. And so what they decided to do was to lock people out of password sharing, but then lower the price. And some analysts think that that might actually raise revenue because a lot of those password sharing people will have to sign up for Netflix. Now, the company is said to be considering alternatives for its ad operations. This is a very quick turnaround after the company reported last year and partnered with Microsoft on its advertising business. A lot of people probably ignore Microsoft's advertising business, but they own LinkedIn. They obviously have Bing. I believe they probably still show the ads on Yahoo. Microsoft's got a pretty big, I think they're in the top 5 easily. Maybe they're in the top 4 in terms of online advertising. Obviously, you've got Meta and you've got Google, and then you also have Amazon, but Microsoft's right up there as well. And so Netflix selected them as a partner because Microsoft's one of the few online advertisers is not trying to get into streaming television, at least quite yet. But it looks like to me Netflix is a little frustrated with what's going on. Maybe the split in terms of the revenue sharing is not in their favor. So Netflix is exploring maybe going it alone, maybe acquiring some ad tech. So that's certainly bullish out there for maybe like the Trade Desk. Not that Netflix would go and acquire that, but if you have acquisitions in those space, it tends to drive up the valuation, especially of kind of the fringe players, if you will. Moving on to NVIDIA. NVIDIA, this one started the week at 224. This one's like got anti-gravity in its shares. Up another 14.6%. This stock is on fire, up over $257 per share. We've got a $630 billion market cap on this stock. It is just absolutely insane. Microsoft unveiled a new virtual machine using NVIDIA's H100 GPUs. Now, that's where a lot of the demand is coming from. If you look at the consumer side, they are balking at paying like $1,500, $2,000 for a graphics cards, but obviously Microsoft's not paying the full price for these graphics cards, but they're buying tens of thousands of them at a time to build these gigantic supercomputers for all this kind of quantum AI kind of training. And so that is where a lot of demand is for NVIDIA. So they don't have to sell to the consumer at the full price. They can kind of leave those cards up there. And if somebody wants to pay $1,500 for a graphic card, NVIDIA is more than willing to sell that to them. And if a consumer is not buying them for their own, like, gaming PC, well, Microsoft and plenty of other buyers out there will be buying those up. Moving on to Google, start of the week at 89, and we popped up over $100 per share again with Google as this stock rallied 13%, finished the week at $101 per share. This is after the company decided to boost the price of its YouTube TV. This will certainly help out there's other players in this space, and this is not a recommendation, but there's Fubo TV that's very much fledgling. I think it's pretty much a penny stock, but this is probably decent for that company considering you're going to go from $64.99 up to $72.99. They did cut the price of this 4K. I also got an email right before this. So March Madness, which is a college basketball tournament out here in the United States, they're going to allow you, the one thing that I don't like about Google TV, and I've had Fubo, and then I switched to YouTube TV primarily because it was a little bit cheaper, but you're not able to watch 2 or maybe even 3, 4 screens at once. It looks like YouTube is going to be rolling that out for March Madness, where you're going to be able to maybe watch like 3 or 4 games at once. I'm excited about that because occasionally I want to watch 2 sports at once. Now, Google selects Fastly, that is ticker symbol FSLY, to enhance its online privacy for billions of Chrome users. Now, this was actually such an interesting headline. I actually wrote my own article about it. I'll have a link in the description below. I have been prolific on Seeking Alpha over the last month. Maybe I have a video idea coming at the end of the month. Maybe that's why I'm writing so much for Seeking Alpha. Stay tuned for that towards the end of the month. But I wrote an article about why the partnership with Fastly is actually more important to Google than it is Fastly. When this headline comes across, you think, well, oh, Fastly, which is like not that big of a company. Okay, this company is worth like $2 billion, and a lot of that gain has happened over the past couple of weeks. A lot of people think, oh, when Google partners with a $2 billion company, it's actually much more material to that company. No. This technology is actually going to be way more important to Google because it's likely going to allow them to show personalized ads on Chrome and eventually Android. And this is something to get around those EU privacy laws. It's also a direct response to what Apple has rolled out with their privacy. This is going to be very important technology for Google if it works. And so my prediction is that Google ends up buying this company Fastly at some point. And so there's certainly some upside here. But if this technology works, this ad technology, which Fastly is just kind of sitting in the middle of, if this works, this is going to open the door up for online advertisers and maybe potentially reaccelerate the revenues over at Google. Again, I'll have links to that articles down below. If you just click and read on my articles, it does help me out a little bit. And if you're on Seeking Alpha, you might as well follow me over there as well. Now, moving on to Microsoft, start of the week at 246. Boom! This one's up 13%, up to nearly $280 per share. It's just incredible after Microsoft offers remedies in European review of that Activision deal. I think we're getting very close to now, here's the interesting thing about this Activision deal, and as it relates to TikTok, which again, Microsoft was an active bidder on when former President Trump was trying to force a sale of that site several years ago. Now, Microsoft trying to fork over $69 billion for Activision. Once this deal goes through, and I think it probably will, well, that's going to deplete a fair amount of Microsoft's cash. They're not going to have the cash on the balance sheet to then go buy TikTok. Well, most of these companies, in fact, other than probably Apple, doesn't have the cash just sitting on the balance sheet to buy an asset like TikTok. So it's possible that Microsoft isn't involved in this next round of a sale, even though it'd be an interesting tie-up. Again, they have a lot of advertising business as well. LinkedIn, they have experience kind of in social media and actually doing a decent job with it. This Activision deal might actually make them pump the brakes on that because they simply don't have the cash, although a company like this can find cash just about anywhere they want. Now, Microsoft to combine Office tools with that AI chat GPT bot. Obviously, I love the speed. I don't know how much revenue this is going to be from a tangible perspective. I don't know if these tools work. Honestly, I'm kind of an Apple guy at this point, but I love, absolutely from an investor perspective, I love the speed that Microsoft is moving here. They're moving at the speed of light, and I absolutely love that. Now, OpenAI says Chat GPT-4 can beat most people's SAT scores, and I believe it. I've played around with ChatGPT enough. It's very impressive. There's a lot of flaws. There's a lot of things that can be improved on it, but I can believe that it can pass an SAT score, especially if you go to the public schools out here in California. Now, Netflix is said to be considering alternative ad options. I talked about this in the Netflix segment, but I wanted to roll it in here. It's a little, I think this is kind of a chink on Microsoft's armor, and it's probably going to make other companies that maybe look to partner. There's going to be a lot of streaming services that are going to be rolling out their own ads and maybe not want to do it end to end on their own. And Microsoft kind of maybe flubbing it a little bit with Netflix might not make them a partner in the future. Moving on to Tesla. This one started the week at 164 and hit the U-turn button and finished the week up nearly 10%, up 9.4%, finished the week close to $180 per share. This is after, though, electric vehicle stocks slumped after Silicon Valley Bank, or SVB Bank, collapsed, and that adds to the funding concern. This basically was our thesis at the very beginning of the show last week. I told you, when these banks start to go down and then the speculative money kind of flows out of these banks and they realize, oh, we can't really loan to these companies. We've got to retain capital. We can only invest in kind of the A-list type of clients. What stocks did I tell you it was going to help? It was going to help all these mega cap stocks. And that is why most of these stocks were up at least 5% this week. And almost all of them were up over 10% this week, because Wall Street is not stupid. I know a lot of you guys watched this doom and gloom content and these guys that post videos not to make you a better investor. Yes, it might be posted as an entertainment option, but none of these guys, or a lot of these guys here on YouTube, are not posting content to make you a better investor. It's to get a click, it's to get a view, and it's to make money. And if I didn't have a backbone or a spine, I'd have fire emojis and I'd have all this doom and gloom content and bank run stuff on my channel all week. I could be reporting on all this, but no, guys, actually this bank run stuff, that creates an opportunity for companies that have high amounts of cash flow, high amounts of cash on their balance sheet, and then have a bunch of competitors that need banks like SVP. They rely on that funding. Well, yeah, that's actually going to help the stocks that we are invested in and we talk about every week on the show. You can either make money or you can watch YouTube videos. You decide what you want to do. Now, what we're going to decide to do is move on to the technical segment of the show. We had a nice reversal in the S&P 500. Not right off. I said our line in the sand was down here at about 3,800 and some change on the S&P 500, and we bounced up. Look, it's not the look, next week we could reverse right here. We could very much reverse this week, retest this 3,800 level, maybe even test lower than that, because we are making a series of lower highs here. So we didn't really confirm anything on the S&P 500 this week, other than there is some demand for stock, heavy demand for the stocks. The bulls really show up right at these levels, which again, you can tell from it. What you're doing with technical analysis is just looking when the buyers are likely to step in. And this line in the sand here and this kind of the top of the green box, that's kind of where buyers would initially start to step in, and they stepped in a major way. Now, on the very bull case next week, you'd love to see this follow up with another pretty strong move from like 3,900 up over 4,000 on the S&P 500. If you get that next week, very bullish sign. It's just showing you that there's just not a lot of sellers. The sellers have dried up. But if you get more selling pressure, kind of like we saw today on Friday, and you move a little bit lower, again, there should be some support at about 3,800 on the S&P 500, a breakthrough on that, and we'll reevaluate. But the broad thing to understand as you're consuming this doom and gloom content and fire emojis and banks are going out of business and it's 2008 times 2 too, guys, is we've literally been in, this is a 14, this blue box right here. Ignore all these other lines and just pay attention to this blue box right here. This is 14% up or down. We've been 14 up or down on the S&P 500 for essentially 365 days. That is not scary. That is not doom and gloom. We are sitting basically right in the middle of a 14% trading range. We're about 7% from the top and about 7% from the bottom. In the shorter term, we're making a higher series of lows and a higher series of highs, saying that we could potentially be in a reversal pattern and we may be going higher. In the semi-intermediate term, we're making a series of lower highs and lower lows, and we're waiting for confirmation if we get another set of lows. If you zoom this out into infinity, we're basically a hockey stick up in the air. And when you look back in 10 years, this will just be a brief blip in the upward trend of the S&P 500. You can watch this doom and gloom content if it entertains you, but I promise you, if you're buying and selling on a whim and taking a lot of these guys' advice that are just giving you this advice and feeding you this information so you click on the video and they can make money, you're going to look back and say, wow, I was stupid to not take advantage of the opportunity that is literally sitting right in front of you. Now, Meta, I'm feeling bad. I sold this stock a couple of weeks ago. I mean, I bought it down here at 150 something, or maybe 130 something, and it rallied up. I sold it after earnings. I thought I was a genius. I thought this gap was going to fill. And, you know, look, you got a TikTok ban, you got other stuff, and Mark Zuckerberg grew a sack between his legs, and he's starting to fire people. And we are in this, I mean, this is the steepest uptrend I've seen in this stock in a while. This purple uptrend is intact. We should, though, I keep saying this, we should meet some overhead resistance up here at 219. I tell you what, we could rally to 219 next week on this stock with the right set of news. Any pullback, we're now looking for pullback. I still am not convinced this gap doesn't fill. You fill this gap on Meta, and I would be the first to buy this stock. If I were to want to buy it before then, you get it pull back to about 183. That'd be where I'd be looking at this one. But I'm going to be disciplined. I'm going to wait on this one. Look, I'm already fully invested into, like Google and basically all these other stocks. And so I'm going to wait until we fill this gap. And if we don't, look, I've just missed a pretty nice run. Although I did sell and make some money on that from a realized gain perspective. Moving on to Apple. This one has found some footing in this one, we'll call it 145 up to 155, but we're kind of at the, I wouldn't say the line in the sand, but we've got a line above us here at about 158 on the stock. You'd like to see Apple kind of push above that, retest these highs up here at 165, eventually kind of power through that. You get power through that, I mean, the whole stock market will be rallying right along with Apple. So very strong looking right now, at least in the shorter term with Apple. This was a nice push up, but like most of these stocks, we're still technically making lower highs. They're not really steep. This wouldn't be where I would like really be loving about adding to Apple. Again, our green boxes represent where I would potentially think about adding. So a pullback to 135, which I actually think could still materialize relatively soon for Apple. That would be where I'd be looking at that one. Moving on to Amazon, definitely had a reversal on Amazon. So we talked about a lot of these stocks. Amazon's not as beautiful from a technical perspective, but we've been in these downward channels. Eventually we did this breakout. Now, when you have the breakout, you often do kind of a back test. And with Amazon, it actually kind of rode along the back test. So it back test and just kind of like ran it down. And then this week we actually saw kind of the pop up. So the sellers basically dried up, and what could be materializing if these were the lows back in October, November of last year, and I'm pretty confident that that's maybe the case. This is what's materializing with Amazon. We have a set of highs here, a higher set here, and it's not pretty with Amazon. Maybe on a weekly chart, on a monthly chart, it would line up and look a little bit pretty. Sometimes technical analysis doesn't look as pretty. When we get to NVIDIA, it's like textbook. But this is potentially what's materializing. You've got maybe another higher set of lows here, and we are going to move up to where these highs were, somewhere in the 113, 114. That'd be another 14, 15% higher. You go up in that range, you'd expect some kind of subsequent pullback. You are looking to buy into those pullbacks because when you look at Netflix, similar type of thing happened. Now, more recently, this stock has broken down from some upper trend that it was in, but it still looks nice. We have higher set of lows here. Buyer stepped in at a very logical area, popped the stock up a little bit. It's not all signs are clear, but we do have earnings relatively soon for this company. We've got earnings literally about 30 days from now on April 18th. That is a Tuesday. We'll certainly be here on the channel. So we'll see where this stock sets up. Typically with FAANG, we set up towards the top. So it wouldn't surprise me if moving into earnings with Netflix, obviously you have broad market stuff affect these things. We set up towards the top. So you could go from 308 to 370 on this one. I tell you what, if you buy in at this level, it's actually a pretty easy level to trade or do from the short term. I'd have a stop loss set at about 280 on this one. You could buy at 303 if you feel like it, have a stop at 280 and try to ride this one up to maybe 400. The risk reward on that one isn't great, but that is, if I had to play it, that's how I would play it. Now, I tell you what, with NVIDIA, I mean, this thing is on a rocket ship. And oftentimes in the market, these semiconductor stocks, they're actually the leading indicator. And so the fact that this stock is rocketing higher, and if you're like me, you're on the sidelines and you didn't get any of this move, you're kicking yourself a little bit. Although I own AMD and I have a semiconductor ETF, so I've captured actually some of this gain. But if this is a sign of things to come, literally every single one of these stocks is going to be not necessarily rocketing up like this, but it is possible. You look at Meta, you look at some of these other stocks, that they are starting to make this type of move. And we literally kind of blew off the top here. This looks really toppy to me. You're retesting highs up here at 280, looking toppy to me. This is probably, if you're in the markets for the shorter term, you're trying to lock. This is where I would start locking in some profits. But at the same time, in the same breath, you get pullbacks to 227. You get pullbacks deeper than that into the 200s. You're buying that stock, I tell you what. Now, moving over to Google, took so much criticism and I was just constantly buying the stock. It looks beautiful. We've made a series of higher lows here. It looks like to me, we want to retest the highs that we made back here in February, up here at about 110. If you do that, that's fantastic. Sure, you could blow off the top like NVIDIA. Wouldn't necessarily anticipate that. We should meet some resistance up at the 110 area, pull back. These are the areas where I'd be excited about with Google, although I've been buying this stock all the way down pretty much. Now, moving over to Microsoft. Whew, this one looks really, really good as well. Made a beautiful move off of basically, I have this red line here. This is kind of like a mid area of resistance. I was actually expecting this one to come back. Maybe we tag kind of this 230 level. I would have gotten more of it here, but no, we did a U-turn and then kind of retested the top of the channel. Now, Microsoft reports their earnings a little bit later. Should be the third week of April. We have a big earnings season here on the channel. This will be next month. They report likely on the 27th of April. Right now, we're already set up at the top of the range. I would expect some kind of meaningful or a decent pullback in Microsoft. If you don't, this one could look like NVIDIA pretty quick. We could retest certainly these highs up here at 293. And then after that, you're well over $300 per share on Microsoft. I have a large position in this one. I would be lying to say if we made this move like in the next couple of weeks that I wouldn't shave a small portion of it off, just understanding that these things get overbought. Now, moving on to Tesla. This one bounced. We have these green box on here. These are where I would be interested in buying the stock. And when I say interested, it doesn't mean I automatically kind of click that buy button. Certainly at the top of the box, I'm not buying them. They get to the bottom of the box, I am buying them. Tesla touched the top of the box, and like most of these stocks outside of NVIDIA and Netflix are the only two that I'm not in currently, and Meta. Not interested in adding to a significant position, although we just kind of hit off an area of support. It ran into an area of resistance, this 180-ish range, which is like 180 to 190 on Tesla. This is an area, okay, where you'd expect some support resistance. Really, you want to see Tesla push over these highs in the coming days, up over 220, get over 220, and it looks like to me could be creating kind of a reversal pattern here, and we'll see if that materializes. Tesla reports their earnings in a couple of weeks or about a month from now, a little over a month, on April 24th. Folks, that was the FAANG Stock Recap Show for this week. We'll obviously be back again next Friday with another show to cover all of the news and the technical chart patterns for the major FAANG stocks. Hopefully you guys enjoyed today's video. Have fun this weekend. We'll be back again soon. Good luck with your investments.